హలో వెల్కమ్ టు టీవీ ఏషియా తెలుగు టాక్ షో విత్ ఎక్స్పర్ట్స్. మరి ఎవ్రీ వీక్ లాగానే ఈ రోజు కూడా ఒక మంచి సరికొత్త టాపిక్ తోటి టాక్ షో విత్ ఎక్స్పర్ట్ మన ముందుకు వచ్చేసిందండి. అలాగే షో స్టార్ట్ చేయడానికి అనిల్ గారు కూడా మనతో జాయిన్ అయ్యారు. మరి మనం ఎవ్రీ వీక్ చూస్తున్నట్టు చాలా డిఫరెంట్ టాపిక్స్ అండ్ చాలా యూస్ఫుల్ టాపిక్స్, ట్యాక్స్ ప్లానింగ్ ఎలా చేసుకోవాలి అండ్ ట్యాక్స్ ప్లానింగ్ లో how different things will be helpful, like real estate planning or stocks cheste etla, how you can take plan your tax year, or if you are doing some other business other than real estate or stocks or other C corp, S corp, LLC, everything అనిల్ గారు చాలా బాగా ఎక్స్ప్లెయిన్ చేస్తున్నారండి. అండ్ మనకు తెలుసు చాలా ఇన్ఫర్మేషన్ మనం చాలా డీప్ గా తెలుసుకుంటున్నాం ట్యాక్స్ ప్లానింగ్ గురించి. సో నో డౌట్ వీ హ్యావ్ టు థ్యాంక్ అనిల్ గారు ఫర్ దిస్ వండర్ఫుల్ ఇన్ఫర్మేషన్. అనిల్ గారు, వెల్కమ్ టు ద షో అండి. హౌ ఆర్ యూ?
థ్యాంక్ యూ అండి. థ్యాంక్ యూ వెరీ మచ్ లక్ష్మి గారు. థ్యాంక్ యూ, వెరీ గుడ్ అండి. థ్యాంక్స్ అండి.
మనం ఎవ్రీ వీక్ చూస్తూనే ఉన్నామండి అనిల్ గారు. హీ ఈస్ వెరీ మచ్ ఎక్స్పర్టైజ్ ఇన్ ట్యాక్స్ ప్లానింగ్ అండ్ హీ హ్యాస్ ఎక్స్ప్లెయిన్డ్ సో మెనీ థింగ్స్ సో ఫార్. బట్ ఎవరైనా కొత్తగా జాయిన్ అయి ఉంటారు కాబట్టి ఐ జస్ట్ వాంట్ టు యాడ్ సమ్ లైన్స్ అబౌట్ అనిల్ గారు ఎక్స్పర్టైజ్ అండి. సో కొత్తగా జాయిన్ అయిన వాళ్ళకి కూడా తెలుస్తుంది. సో హీ హ్యాస్ 15+ years of experience in finance profession as finance controller, CFO and and he holds other senior executive positions also. He worked in great organizations like Amazon, Starbucks, PwC and Sun Edison. And he is helping his clients take advantage of tax planning opportunities and strategically setting up the clients' businesses for success. And this is very important. And he has a professional team of CPAs, chartered accountants and other financial professionals. So please feel free to call Agfintax for your tax planning and any advanced tax planning, I can say. So Agfintax and Anil Garu will be very happy to help you in any of your queries, questions or tax planning. Anil Garu, start చేద్దామండి షో without any further ado.
షూర్ అండి, తప్పకుండా లక్ష్మి గారు. థ్యాంక్ యూ వెరీ మచ్. థ్యాంక్స్ ఫర్ ద నైస్ ఇంట్రడక్షన్.
థ్యాంక్ యూ అండి. ఈ రోజు మనము హెల్త్ సేవింగ్స్ అకౌంట్ అండ్ ఆ బెనిఫిట్స్ ఏంటి, హౌ యూ కెన్ టేక్ ట్రిపుల్ ట్యాక్స్ అడ్వాంటేజ్ ఆఫ్ హెల్త్ సేవింగ్స్ అకౌంట్ అనే టాపిక్ మీద డిస్కస్ చేద్దామండి. సో దిస్ ఈస్ ఆల్సో వెరీ ఇంపార్టెంట్ టాపిక్. ఎందుకంటే చాలా చోట్ల, అంటే చాలా ఆర్గనైజేషన్స్ లో వెన్ వీ ఎన్రోల్ ఇన్ టు హెల్త్ ఇన్సూరెన్స్, HSA ప్లాన్ కూడా ప్రొవైడ్ చేస్తూ ఉంటారు. సో చాలా మందికి అంటే మనం HSA తీసుకోవాలా వద్దా, తీసుకుంటే ఎలా యూజ్ అవుతుంది, దేనికి ఎలా దాన్ని మనం అంటే దేనికి యూజ్ చేసుకోవచ్చు, ట్యాక్స్ లో ఎలా దాన్ని అంటే అడ్వాంటేజ్ తీసుకోవచ్చు అనేది చాలా వరకు తెలియదండి, అన్లెస్ మనం ఎవరితో ట్యాక్స్ ప్లానింగ్ ఎక్స్పర్ట్ తోటి చేయించుకుంటే తప్ప. సో ఈ రోజు దిస్ ఇస్ అ వెరీ అంటే యూస్ఫుల్ టాపిక్ అండి. చూద్దాము మనకి ఈ డిస్కషన్ ఎలా వెళ్తుంది అండ్ హౌ మోర్ ఇన్ఫర్మేషన్ వీఆర్ గోయింగ్ టు గెట్ అవుట్ ఆఫ్ ఇట్ అనేది. So without any further ado, I would like to ask you అండి, as I told you, మనం చాలా వింటుంటాం మెడికల్ ఎక్స్పెన్సెస్, హెల్త్ ఇన్సూరెన్స్, ఆల్ దోస్ థింగ్స్ అండి. సో ఒక్కసారి వాట్ ఆర్ దే అనేది ఒకసారి ఎక్స్ప్లెయిన్ చేస్తారండి?
షూర్ అండి, తప్పకుండా అండి. థ్యాంక్ యూ లక్ష్మి గారు. యాజ్ యూ సెడ్, HSA is a very important because there are a lot of advantages by having an HSA account. But most of the people don't even know what are the advantages of HSA. Why employer offers those HSA to the employees, or who can contribute to the HSA, or who can avail those benefits, what are the other advantages we have, which we can cover now. And as you said, yes, there are many different program names are there in US. Mm-hmm. And the few popular programs are health savings account, family savings account, and also there are some MSA programs which are being supported by government, US government. Okay. So there and few programs are closed recently. Some MSA programs are closed recently, but now today we will focus more on HSA, health savings account, which has a triple tax advantages.
Okay అండి, yeah, sure, definitely, and thank you so much అండి for giving us information on this. And what is HSA అండి?
Okay, so HSA is health savings account. So this will help you to get an extra free cash flow from the tax savings perspective. So instead of paying to the IRS, if you contribute to this money, you get a tax deduction, which will help you free extra cash flow into your regular family life. So one of the most important and popular advantages of HSA is whatever employee contribute for the HSA account, it is a tax deductible, and you can use it for medical, dental, and any healthcare services related things. For purpose, you can use this HSA balances. And for HSA, generally an employer sponsors HSA. I know that most of the companies in US offer this HSA as a fringe benefit to employees. So, and it's always, whenever you open an HSA, there should be a trustee. So when employer set up a HSA account for employees, he will take care of all those formalities or compliances requirements. But as an employee, it is a great opportunity. If your employer is offering HSA services, definitely you should explore if that suits for you or not. If possible, I recommend you, if that works for you, please go and opt for that and start contributing.
Oh, okay. Yes. Is there any permission required to set up an HSA account?
Okay. So this is for HSA accounts are being set up by employers. Employer can set up an HSA account. Daniki IRS nunchi specific, he doesn't need any specific approvals or permissions.
Okay.
So HSA, but only thing is HSA need a trustee. So who trusted when the employer setting up a HSA account, he himself becoming a trustee for the account. So so he will take care of that, and no, as an employee, you don't need to worry about any approvals. If your employer is offering, the assumption is he is taking care of all the requirements. You just go and apply.
Oh, okay. So this is the employer program. This is not something that any person can enroll into, right?
Either self-employed, if you are self-employed, then yes, you can have it on your own. Or if you are working for someone W2, so then your employer has to sponsor this.
Oh, okay. Who is eligible for this HSA?
Okay. So HSA, everyone is not eligible. So there are some requirements. So the first requirement is you need to have high deductible health plan. So as you know, everyone has some health plan, employer supported, or maybe from if you are a self-employed, you might be taking some from the marketplace directly. Okay, wherever you take, if you have a high deductible health plan, then you are eligible for this for HSA account. Okay, and you should not. Some people have different types of health insurance plans. Okay, so but you need to have only one plan. You need to be enrolled in only one plan as an individual, and you are not supposed to enroll in Medicare plan. So once you retire, government will offer a Medicare plan for it. So then if you enroll in Medicare plan, then you cannot have HSA plan.
Oh, okay. Okay.
Yeah. Sorry, there is one more last thing is you are not supposed to be claimed as a dependent in anyone else tax returns. For suppose if I have a kids, if I am claiming my kids as my dependents, kids cannot have their own HSA account. So even you become for suppose in some situation, in some tax returns I noticed, their parents are being claimed as a dependent. If that is the case, the parents cannot have their own HSA account.
Oh, okay. Anyway, it is okay. Even if they are working for some other employer, still they cannot have their own HSA because they are dependents to some other.
Yes, you are right. If you are being claimed as a dependent in anyone's tax return, any other person, so then you cannot have your HSA account.
Okay, I understand. So what is high deductible health plan?
Okay. So I just said there are different types of health plans are being offered by all the health service providers, health insurance service providers. Basically, high deductible plan is recommended for healthy people, not for patients. If you are a patient, if you are facing some health issue, or if you are expecting a lot of medical expenses, then high deductible plan is not for you. So basically, high deductible plan is the plan where you have to meet some deductible limits, like it can be some $1,500 to $3,000 minimum based on what plan you opt or with whom you are working. So the health insurance company will come forward and help you to take the share of health insurance, health expenses only if you meet the deductible. So the deductible is very high. So that's why it is called high deductible medical plan. Only if you have a high deductible medical plan, then only you can open an HSA account. Otherwise, you are not eligible for HSA account.
Oh, okay. Okay. So what are the benefits of having HSA account?
Okay. So the first most popular advantage is it's a pre-tax dollars contribution. And whatever money you contribute, it can be 2,000, 3,000, whatever money you contribute, that is a pre-tax, so that you don't need to pay any taxes on that money. Example, whatever income you earn on this your gross income, you deduct this HSA contribution. So on the balance amount only you are liable to pay taxes. So when you are computing taxable income, this amount is very useful. I mean, this amount will be excluded. So this is the first advantage. And the second advantage is the second advantage is whenever you withdraw money for your medical benefits, you don't need to pay any taxes. Like example, in 401k account, when you contribute, you get a deduction. But when you withdraw, you need to pay taxes. Yes. But in HSA account, when you contribute, you get a deduction. When you withdraw, you don't need to pay any taxes, provided you use it only for the medical expenses only. You cannot use it for other purpose, but as long as you use it for qualified medical expenses, you are eligible to get a tax. You don't need to pay any taxes on the deduction, on the withdrawals. So it goes free, tax free. It comes out as a tax free.
Oh, which is really a great advantage, we can say, right?
Yes.
Manaki generally a plan we don't see this advantage.
Yes, you are right.
Here the only constraint is we have to use it for only medical expenses.
Yes, you are right.
So yeah. So what happens to the money remaining in the account at the end of the year end?
Okay, this is a good question. Okay, I contributed the amount, I get a tax deduction, but I don't have any medical expenses. So what you do? Otherwise, my medical expenses are very less for this year. You don't need to worry. It will be roll over to year on year on year. And how many years it is, you don't care. You don't need to worry. An example, you are at 25 years old now. You can use this HSA account even at the time of retirement also, those balances. So you don't need to worry. Just it rolls over and you can use it for any medical, dental or mental health services also. Mental health service expenses also qualify as a qualified expenses. So you don't need to worry. And it is a portable. It means even you change the jobs, you don't need to worry. That account is yours. That account is yours. You can roll it over. And there is no mandatory that you have to use all these expenses by this year, or you have to spend the entire money this year. Nothing to worry. Just you contribute, take the tax advantage, roll it over. Definitely, we all will incur medical expenses in our lifetime. Whenever you incur expenses, then you can use this account.
Oh, okay. So now we know what is HSA and how we can contribute and all those things. Who can make the contributions?
Okay. So generally, whenever an HSA account is being offered as a perk by the employer, sometimes employer do some contribution. Like example, the maximum limit is around 7,100, which we're going to discuss now. So in that example, employer can say that, okay, I contribute $1,000, I contribute $2,000. So he can contribute on your name, number one. You yourself can contribute either through employer, or otherwise you can directly, even once you have the account, you can even directly go and contribute. Even you can contribute after tax dollars, but you get a tax deduction later in the tax return.
Okay.
In other words, if your payroll is set up whenever every month, whenever you're getting the salary, if you have already set up in such a way that this contribution gets deducted from your salary, then it will be part of your W2 and it's a pre-tax contribution. So everything is taken care. Sometimes what I notice is, example, a person contributed only $2,000 in a year. At the end of the year, when we file tax returns, we say that, hey, you have an opportunity. Why can't you contribute? Why can't you fill the gap, which is 7,100 for a family can contribute? Why can't you fill the gap? This person will go and contribute directly this $4,000 gap directly by online, by just in online account. Otherwise, you can call the customer service and you can contribute. That is called post-tax contribution. Then you can get a tax deduction specifically when you file a tax return. So whatever you contribute, either pre-tax money, post-tax money, you get the tax advantage. And even any family member can contribute to this account. Like example, I am working and I have an HSA account. My wife doesn't work, but still my wife can contribute to my account. So the total altogether, the family can contribute up to $7,100 as a maximum contribution a family can do it.
Oh.
And all contributions has to be in the cash contributions or cash or bank. You cannot contribute by stock. Example, I have some stock in my account. Can I just transfer my stock to this account? Answer is no, you cannot do it. Only cash only can be used for the contributions.
Okay. Actually, మీరు ఇంతకు ముందు HSA, if you have HSA account, anybody can contribute or we can contribute అని అంటున్నారు కదా. Suppose a person has an HSA account with current employer, for example. Suppose in future, if he moves out of that employer and he is with another employer where he doesn't have HSA account, still can he contribute to this old HSA account?
No. If he has a high deductible plan, then the answer is yes. If he doesn't have an high deductible plan, he is not eligible for that.
Okay. Suppose if at all, if it is not high deductible plan, but still he is contributing here, how they will know that it is high deductible or not?
Okay. So in those cases, the banker, the HSA account you can open with any service providers or with the banks. So whenever you exit, so the banker will know, the account, whoever has the custodian, they will know that you already left the company. For suppose, otherwise they will ensure that it's their responsibility that whether you have a high deductible plan or not, they need to check. Or otherwise, you personally, the individual is also responsible for the accountability, like whether I have a high deductible plan or not. I can get the tax deduction only when you have a high deductible plan. Otherwise, you will not get it. And even when if your file gets picked for audit, IRS may also catch you that you don't have a high deductible plan, but still you are contributing. But in all this scenario, the custodian of your account is the banker. So it's their responsibility to ensure that you have high deductible plan to continue and to contribute. So every year the banker will send an email to you, or he will check with you. Do you have high deductible plan? Yes or no? If you say yes, then you can contribute. If you say no, then you lose.
Okay. Yeah.
So there are some checks are there, but I know that some people still continue to contribute even they don't meet the criteria. In those cases, technically they are not allowed to claim the tax deduction.
Oh. Yeah, as you said, in audit adi vachinappudu, then definitely it will be a problem. So better to follow the rules when you are contributing.
Sure. But it's a very good question. Yeah.
So is there a limit on contributions? And intaku mundu limits evo chepta unnaru kada?
Yes, and there are limits. So if you are a single, if you are filing your tax return as a single, then you can contribute up to $3,550 for this year 2020. If you are a family, then you can contribute up to $7,100 as a family can contribute. And if you are age 55 years and above, then you can contribute $1,000 as a catch-up contribution extra. Extra you can do it.
Okay.
Whatever is a single or family, $1,000 extra you will get it if you have the account and if you are 55 years and over.
So like any other plan like 401k IRA, you have that catch up.
Catch up. Yes.
Yeah. Very good, and actually it's useful for someone who is already more than 55 years old. Good. So is there any deadline to make the contributions? And
Sure, Andy. Yes, you before you file your tax return, you can contribute to your HSA account. Like example, the regular individual tax deadline to file a tax return is April 15. So for year 2020, you can contribute till April 15, 2021 for HSA if you have an HSA account. So what happens is, what we notice is generally before April 15th, people come to us to file tax return. When we are reviewing it, we notice it. Hey, you are eligible for $7,100, but you contributed only $3,000. Why can't you contribute the balance amount? That one step will save few hundreds of dollars in taxes. This one contribution. So April 15th, 2021 is what the deadline.
Okay. So should these contributions be reported on the tax returns?
Yes, Andy. It has to be it has to be reported. Like example, if you are contributing as a pre-tax, then it's already part of your W-2 and it's already reported in the tax return. If you are doing the post-taxes, then definitely yes, again it has to be reported in the tax return to get your tax deductions.
Okay. So, and how are they reported in case of a partnership, as most of a small businesses are flow through entities? As we know, small business entities like pass-through entities and C corporations, different untai kada. So how does that work?
Okay, so basically, as I said, individual self-employed we covered as an employer. Sorry, we covered as an employer and employee relationship. When you are a partner, you get your income every year. You pay taxes based on your K1 from the company. But if the partnership firm is paying your HSA contribution, so then what happens? There are two scenarios, Andy. If the partner, if the partnership firm or partnership entity is doing the contribution, then it is considered as a profit withdrawal from the business. So the option number one, you can take the money as a profit withdrawal and do the contribution. When you take the money as a profit withdrawal, it doesn't have any impact on your income, on your gross income, because you pay taxes based on the K1, which is nothing but your partnership business income.
Okay.
If you take the money just to contribute to the HSA, it is considered as a profit distribution. So it's not a company expense. It's it's a profit distribution. And there is also one more way where you can even take it as a guarantee payments, like a salary, because partnership is not required to run a salary. But if you can take it as guaranteed payments, then it will be part of your gross income. Whatever the scenario, if HSA, if you are contributing to an HSA, you can claim tax deduction for your contribution when you file your individual tax.
So let's take a short break and come back, Andy.
పండుగ సమయంలో అందరూ గెలుస్తారు మలబార్ గోల్డ్ అండ్ డైమండ్స్ లో. గోల్డ్ లేదా డైమండ్ ఆభరణాల కొనుగోలుపై గోల్డ్ కాయిన్స్ ఖచ్చితంగా గెలుపొందండి. పైగా 10% అడ్వాన్స్ చెల్లించి గోల్డ్ రేట్ల పెరుగుదల నుంచి రక్షణ పొందండి. బంగారం ఎక్స్చేంజ్ మీద 0 డిడక్షన్ ఆనందంగా అందుకోండి. 10 దేశాల్లో 250 స్టోర్లలో బెస్ట్ డిజైన్లని బెస్ట్ ధరాల్లో పొంది గ్యారంటీడ్ గోల్డ్ విన్నర్ అవ్వండి. కేవలం మలబార్ గోల్డ్ అండ్ డైమండ్స్ లో మాత్రమే. మలబార్ గోల్డ్ అండ్ డైమండ్స్, సెలబ్రేట్ ద బ్యూటీ ఆఫ్ లైఫ్.
back to TV Asia Telugu talk show with experts Andy. So TV Asia Telugu is available on WorldBBTV, Dish Network, YouTube, and TV Asia Telugu website is there, and Facebook is also there. Please, whenever you have some time, please log in into one of these channels and you can watch all entertainment and informative shows also. So please make sure that you watch all your favorite shows. So next, Anil Garu, let us start with how about 𝗧𝗅 and specifically let us discuss about 𝗧𝗅 HSA 𝗧𝗅 ela and how the contributions will be done.
Okay. So as an 𝗧𝗅, the entity can pay owner employees HSA contribution. So as a company it can pay, but that has to be added to the income of the employee, the owner employee. Like example, this 𝗧𝗅 pays $7,100 for the business owner on name of the business owner. Yes, you can pay it, but it has to be included as a W-2 salary for that person. So his salary has to be grossed up for that amount, and the individual person will claim it as a deduction when they file a tax return.
Okay.
So yes, 𝗧𝗅 can pay, but it has to be added back to the gross income of the owner employee. But the owner employee can claim the deduction when they file a tax return.
Okay. Understand. So you can pay from corporation, but you can take deduction as an individual employee. Okay. So what is a tax form to report these contributions, and is there any form name or something like that?
Yes, sir. So there are two things I want to identify. If you do the contributions through your paycheck, then it has to be part of your W-2. And if there is a box called box 12 of the W-2 with a code W, we call it's a code W we use to mention how much money employer is contributing. Okay. And for your contribution, you get a form 5498SA. And service provider will send it to you. Hey, you contributed this much of money, your employer contributed this much of money. You don't get any deduction for your employer's contribution. You get only deduction only for your own deductions, own contributions. And all these forms have to be reported in the form 8889 in IRS individual tax return 1040. So we need to say that how much employer contributed, how much employee contributed, how much tax reduction we are claiming now. So those all has to be shown in form 8889. Okay, when you file a tax return. And this can be done in either in 1040 non-residents or individual tax returns.
Okay. So yeah, so that the other part is like if the individual has contributed excess amount ankunte, so then what happens to that excess amount?
So as I said, there is a limit of 7,100. But when you do the transfer, money will go into the picture. And when you are not eligible, also people contributed, as you were mentioning earlier. Okay. So in those cases, what happens? The excess contribution or ineligible amounts are not deductible. In your tax return, you cannot contribute. Example, I contributed $8,000 this year, but only 7,100 is what I allowed. So the difference, $900 is not deductible as a tax, as not a tax deductible. So whatever, even you pay extra, don't care, it's not deductible. The maximum is only 7,100. Okay.
But when you are spending the taxes amount, so is it okay to spend tax free?
No, I mean you cannot even you don't get any deduction, but you need to pay penalties for that.
Oh, okay.
If you can contribute, but you need to pay 6% excise tax on excess contributions.
Wow. Other than tax.
Other than taxes, yes.
Okay. Okay. That's a like penalty that you are.
It's a pure penalty actually.
Yeah, I don't think it makes sense to contribute any excess amount, right? Because anyway you're paying after tax that you can use it for any purpose. And on top of that, by paying 6% penalty, you don't have to contribute, right? Because you're losing that 6% unnecessarily by contributing.
But people do it by mistake.
Okay.
They contribute more because they don't know the rules. Everyone don't know 7,100 rule, so that they may contribute more. So they get into the problem.
That is why we need expert advice, right? That is what all about our show, that we need expert advice for everything.
Yes.
So this is one of the expert advice in today's session, Andy. Please make a note, and it is very important that people do the mistakes without knowing, not like knowing mistakes, but without knowing also we can do a lot of mistakes, which causes more penalties and more loss to us. So that is where we need expert advice to avoid all this. So thank you, Andy. This is really a great point to be noted here. So I was about to ask you, like, is there any penalties for excess contributions, Andy? So you just explained that there is 6% penalty, and you have to pay tax on those excess contributions.
You are right.
So, yeah. So I just want to make it clear that please keep note of this, that they have to pay a tax plus penalty on those.
No, it's not about the tax, Andy. Just let me clarify this further. $7,100 is what allowed. But if I contributed excess because I didn't know that, okay, I contributed $8,000. So IRS will ask you to pay 6% penalty on this $900. It's a penalty. It's not income. It's a penalty.
Okay, but 900 can be contributed before tax, but you have to pay 6% penalty. That's what you are saying.
Oh, that is not even allowed. It cannot be pre-tax. The maximum is only 7,100.
Okay, that's what I'm saying. It is after tax plus you have to pay penalty.
Yes, you are right. Correct. You are right.
So then how can the penalties be avoided, and is it possible?
Yes, Andy. There are some ways. Once you contribute, whether knowingly or unknowingly, before you file your tax return, before the due date, which is April 15th, then you can withdraw the excess money, whatever you make, whatever you contributed, you can withdraw that.
Okay.
So when if your tax expert is good enough, he can guide and say, you contributed more, please withdraw money. So there is a possibility that you can withdraw money and you can avoid the taxes.
Okay. So you can withdraw before filing the taxes, ante kada?
Yes, Andy, correct. Okay, but only thing what happens here is, which we're going to cover later, but this 6,000 may earn some interest, or if this money can be invested somewhere else in the stock market. In this example, this $900, $8,000 is what I contributed, but maximum is only 7,000. This 900 may become $1,200 by the time of withdrawal.
Okay.
Okay. So in those cases, the difference amount is an income for you, and you need to pay taxes.
Okay. Yeah, it makes sense, and because you made money on those contributions, so you have to pay tax on that. Okay.
Yes, correct.
So is contributing to HSA the best way to cover medical bills, or is there any other options,
Okay, Andy. Usually answer is yes, but this is not the best option for the patients. So HSA is not the best option for the patient, because to have an HSA, you need to have a high deductible plan. So if you are a patient, if you have some family health problem, or if you're expecting some procedures, surgeries, so then high deductible medical plan might not be a good option for you. So otherwise, yes, it is good, Andy. It takes care of a lot of cost, but I do also recommend to not use HSA account balance for your day-to-day medical expenses. I recommend not to use it. I recommend you to accumulate those funds. I will tell you what is the purpose as we move forward.
Okay. So then what are the options do you suggest for the patients or medical bills account? Then it's not an option, annar kada? Then what is the option that do you suggest for them?
Yeah, for them, if you have some health problems, I recommend you to don't go for high deductible medical plan. Please go for a higher premium policies, higher premium medical plans, so that you get more advantages, because the cost has to be shared by the insurance company. Okay, but don't go. Those numbers are much bigger than the tax saving amount. So this HSA plan is not suitable for everyone. It is suitable only for healthy people. If you are not healthy, don't go for this route just to save taxes. Rather, you go for a high premium paid insurance plan, and you get more medical advantages, medical cost advantages from your insurance company. So don't get trapped by, hey, I get tax savings here. No, those expenses at the health insurance is health expenses are much expensive than this tax savings amount.
Oh, okay. So how can we withdraw money from the account, and is it possible to withdraw?
Okay, so you cannot directly take the cash. You can take it, but you need to pay penalties. Okay, you need to pay 10% penalty, and it is a taxable if you just directly use it for non-qualified expenses. But if you use it for the qualified expenses, like example, qualified expenses, then it is deductible. And you get, once you open a HSA account, you get it like a debit card. One card you get it. You can go and swipe it for all your medical expenses, any pharmacy store, or for any medications, or if you go to the hospital, you can just use it for any medical related expenses. You can use it.
Okay. So can we roll over the amounts from other HSA to current HSA account, and if you have any?
Yes, Andy. As you change the companies, in the previous company, you may be having an HSA account with some service provider. In the new company, you may be having some other service provider. So you can roll it over just like an IRA account. You can roll it over from one account to other, one account to one service provider to other service provider. You can do it. And so whenever you do the rollovers, they are not contributions. Okay. So it won't impact any of your 7,100 contribution limits, but you can just roll over from one account to other account.
Instead of maintaining 2-3 accounts, you can consolidate and create make it as single account.
Yes, you are right.
Yeah, easy for convenience purpose, we can say.
Yep, correct.
Okay. What are the qualified medical expenses, Andy?
Okay. Qualified medical expenses, as I was mentioning, you can use it for any medical and dental expenses. And for who are eligible to use this HSA balance is like you, the person who is contributing, his spouse, and also the dependents in his tax return. So the dependent can be kids, or dependent can be parents. Any dependents, if they are claiming, they are also eligible to claim this to use this HSA balance.
Okay. So our insurance premiums qualified? Our insurance premiums are qualified medical expenses only.
Okay. So whenever, as I said, you can use this HSA balance to pay medical expenses, but you also pay medical insurance premiums every month. Are they eligible? Answer is no, except few cases like long-term care insurance. If you are paying, then yes, it is allowed. And healthcare coverage while covering unemployment compensation. If you are claiming unemployment, but you need to pay something for healthcare coverage, in those circumstances, if you have any balances in HSA account, you can use it. Okay.
Okay.
So then also for COBRA, if you left your previous employer, after that some employees continue to avoid medical benefits using the COBRA option. So if you pay any premiums for COBRA account, you can use your HSA account balances.
Oh, okay. Oh, I don't know that we can use this for long-term care premiums and COBRA premiums. This is something very interesting and very useful also, because if at all, if someone is leaving the current employer, you don't know, there might be so many reasons, right?
Correct.
So if at all, if they don't have any other job or any other medical plan, then they can use this money for COBRA premiums so that they don't have to lose their health coverage.
You are right. Correct.
What if HSA account anybody can have HSA account who are qualified with all these points that we just discussed? Suppose if a person has an HSA account and if the person passes away, what happens to the account?
So then if that is the case, then the account will be passed to the spouse, who is the beneficiary of your account, the designated beneficiary. If you mention that my wife is the beneficiary or spouse is the beneficiary, then the HSA account will be transferred to her name, and she can use the money for the medical expenses purpose. And those all are taxable, tax-free. Okay, tax-free contributions. Tax-free withdrawals, she can do it for the medical expenses.
Okay.
Or suppose if spouse is also not there, and if it's moved to the next legal heirs, if the balance moved to the next generation, then it is taxable in the hands of the recipient, number one, and it is no more HSA account. The HSA benefits are closed.
Oh, okay. So they pay tax on that whole amount, and it is not anymore carried away with HSA rules and regulations.
You are right. Correct.
Okay. So if at all, if it is transferred to the spouse, then the spouse cannot contribute, but they can use it for
the medical expenses. Yes.
Medical expenses without paying any taxes.
Correct.
Okay, nice. So till now that we discussed about HSA contributions for employees, and so how it works, Anidhi. So please explain what small business owner employers should do.
Okay. So small business owners always, as I mentioned in the earlier in this session, employer can contribute to employee. Okay. So, but those contributions cannot be deducted as an tax deductible expense for employees. In other words, example, the maximum is $7,100. If employer contributes $2,000, those $2,000 again employee cannot claim it as a deduction because he is not paying from his pocket.
Yes.
But for the employer, it is a business expense. So he can claim when he file a tax return, but employee cannot get the deduction from this amount.
Okay. So here I one more doubt, Andy. Suppose it's 7,100 is the limit for HSA contributions, kada. Suppose, let's say if employer is contributing $1,000, for example, so then the remaining contributions that the employee can do is only 6,100.
You are right.
Oh, okay. So together, no matter who contributes, but the total limit is 7,100.
You are right, Andy. Correct.
Oh, okay. So
చాలా employers ఏంటంటే employers may have the option of HSA account, but they may not be contributing because this is an additional expense for them.
Yes, I know.
Some employers say that, okay, I pay $1,000 for every employee. I pay $2,000 for every employee per year.
Okay.
So in those circumstances, yes, I mean, they get a tax deduction because they are contributing and you are not contributing anything, so you don't get any deduction.
Okay. So how will the employer benefit by contributing to HSA? And you just mentioned
I just mentioned that actually. I mean, it's like a deduction for in their individual tax return. They claim it as an expense for them.
So it becomes a business expense to the employer.
Correct. Yeah.
Okay. Okay. So can HSA also be used for wealth building too, Andy?
Yes. This is a very important point for the entire session today. Most of the people don't know this. I know many people have, or many of the viewers have HSA account, but they don't know how to use this HSA account as a wealth building tool. Whatever you contribute, the contributions can be invested in any online securities like stock, mutual funds, or bonds. You can invest wherever you want, and it grows tax free. Your contribution of $7,000 can continue to grow, and it may become some $15,000 or $20,000 in the 10 years of time. And all this growth is a tax-free growth. It means you don't need to pay any taxes when it is growing. So 7,000 may become 8,000, 9,000. So you don't need to pay anything, but it grows tax-free. And it is like a Roth IRA account. You contributed and it grows tax-free. And Roth IRA account, what happens whenever you withdraw money, you don't need to pay any taxes. In the same way, if you use this money for future any medical expenses, you don't need to pay any taxes. It is like a health IRA. So this health IRA, you contribute, you get a tax deduction. It grows, which is a tax-free growth. And again, you withdraw money for the medical expenses, you don't need to pay any taxes. So
yeah, winner kadandi. This is where there is triple tax advantage that you see in HSA account.
Yes.
Because we are contributing before tax money and it is growing without paying any tax deferred, we can say. And when you use it for medical expenses, you are not paying any taxes. So that is why it is called triple tax advantage, right?
Correct.
And
You're right, 100% you are right.
Yeah.
Correct.
So-
And I also recommend, like many people, many of you viewers may have a 401k account, may have an IRA account. I also say that they should consider to have an HSA account also as a wealth building tool. You contribute every year 7,100, contribute, but don't withdraw. Don't you withdraw for your regular maintenance medical expenses. Let it grow, and you can use the money at the time of retirement. Other beauty of this program or plan is, even at the time of retirement, you can claim medical expenses which you incurred even 20-30 years before also.
Okay.
Example, I am at the age of 40, example, just if a person is at 40 years age, he started contributing to the HSA, but he is not using HSA money to pay his regular medical expenses, maybe co-payments or maybe some prescriptions, but he is not using it. He let the money to grow tax-free. After the retirement, maybe at the age of 70, yes, generally after retirement, you have a lot of medical expenses. He can use this money. For suppose if he doesn't have any medical expenses, he can claim for the medical expenses which he incurred at the age of 40 with his own out-of-pocket expenses.
Okay.
So there is no time limit. You can go back 20 years back, bill, and you can claim now.
Yeah.
So
This is the great benefit of this contributing to this HSA account, and you just explained. So you can contribute any time and any number of years or any amount of time, and you can claim it in any time in your life.
Yes.
Even later also after retirement, or when you, and it is useful for both wife and husband, because as a spousal benefit, then it is useful for both of them. You have longer period of time that you can avail the benefits, or you can use the money out of HSA account. So that's really a great advantage of this account, Andy. And I don't think, correct me if I am wrong, I don't think there is any plan that you can contribute before tax and let it grow tax deferred and withdraw tax free. So I don't think there is any other plan available other than this.
There is no other plan like that.
No
Even
other.
Roth IRA or 401k, no plan can beat this HSA account. The only disadvantage is it has to be used only for the medical expenses at the time of retirement, or whenever you want to use the money. Obviously, when we become older, we'll have medical expenses. So we don't need to have any major health problems. Even for regular medical checkups also, we need money. And once we retire, definitely we are not going to have income. So at that time, this money is really useful, and you can let it grow all these years so that it becomes a big source of medical expenses. Exactly correct. You are right, Andy. Correct.
Thank you so much, Andy. So this is really a great point and great advantage. Everybody has to know, because a lot of people, they don't know what is the advantage of HSA, and maybe they are not taking full advantage of it. So chala varaku, as far as I know, if at all, let's say if we have a medical plan and the deductible is, let's say, 2,000 per year anukunte, so a lot of people will contribute only 2,000.
Yes.
Because that is what our deductible that we have to pay out of pocket. But I don't think everybody knows the long-term benefits of this HSA.
Yes.
Which we just discussed, and it's really a valid and very big advantage of HSA account.
Correct. Yep.
And it becomes a part of wealth building tool also, as you just explained, which is very great point. Amazing. Everybody has to remember, actually.
Yep.
So tell me, Andy, we discussed so many points about HSA and tax advantages, and how you can get corporations get advantage of providing or contributing to HSA and all those things. So what is the conclusion that you want to hear, Andy?
Sure, Andy. As I said, HSA is one of the best saving options available, but most of the people don't know this. And this is even important than 401k. As I always say, 401k matching contribution, you should do it first, because it's a free money. After that, you can consider contributing to HSA. And contributing HSA, don't stop there. Let it grow. People don't know that they can invest in the stock. They can invest in the mutual funds. So go to your online account and start investing this money and let it grow tax free.
Okay.
And you can use it later when you retire. And this is a very good investment vehicle which grows tax free, which comes out as a tax free, which contributions also tax free. And to be eligible for this HSA plan, you need to have a high deductible plan. When your open enrollment starts again, if you don't have a high deductible plan at this point, and if you are healthy, if your company is offering this high deductible plan, please go and explore if that works for you or not.
Okay.
If it works for you, then go for HSA account and optimize it. And you have time to contribute till April 15th of the next year for 2020 contributions.
Okay.
But whenever, example, if you are contributing in February 2021 for the 2020, ensure that the contribution is going to the previous year, not to the current year. So just you need to talk to your customer service, HSA customer service team, and you need to get it.
Oh.
That's it. And this is a great triple advantage tax benefit. This is one of the best vehicle we have as an investment tool, wealth builder, and also tax saving strategies.
Okay. Yeah. Thank you so much, Anil Garu. So it's really a great topic and a lot of information about HSA account. So you explained it really wonderful and it is very useful also. So చూసారు కదండి, please, if at all, if you have HSA plan available from your employer and if you are healthy, please try to take advantage of this HSA plans. Thank you so much, Anil Garu. Next week మనం ఇంకొక టాపిక్ తోటి మళ్ళీ కలుద్దాము. అప్పటి వరకు have a wonderful week ahead అండి. Thank you so much.
Thank you, and thank you, Lakshmi Garu. Thank you, TV Asia. Thanks for watching. Thank you. Bye.